Good morning. It is Tuesday, December 3rd, 2024, and this is Robert Sin. You can find me on CEO.ca as at Goldfinger, on X as CEO Technician, and this is Goldfinger Capital on YouTube. Also, you're staring at my Substack, also Goldfinger Capital. So this video is being made as a complement to my annual tax law silly season shopping list. This will be the 2024 edition, December 2024. And yeah, this is the 7th annual list that I have done. It has become a tradition. And before we get into the 6 different stocks and delve into some of the reasons why they are on this list, I just want to review the intro here. I usually start off with like 20, 25, even 40 candidates. So just like a list of potential ideas. Usually that list gets cut in half pretty quickly when I just find a lot of them are not compelling. And eventually it gets down to about 10 or 12, and that's when it gets harder. There were several stocks that just missed this list that very well could be on it, but just for the sake of brevity and just not having a ridiculously long post. Already, this is a very long article. This is probably the longest article I write every year. It takes a lot of work for me to put this together, quite frankly. I just want to be clear about that. In total, this is probably about 30 hours of research and writing and rewriting and editing. It might even be more than 30 hours. It takes me a week usually, 5 to 6 hours a day for an entire week. And then I finally put something together that's somewhat coherent and legible. So it's an idea list. That's the first thing. Just for your entertainment value. Probably a couple names on this list. Some of the readers are just going to laugh at and be like, why the hell did he choose that? No way, I'm not buying that. That's fine. Difference of opinion. It's what makes a market. You got to remember that this is a list of beaten down bottom fishing picks. This is not the best performers, the ones that have had a great 2024. This is the opposite. These are companies that have had a rough 2024. And market sentiment is generally pretty negative. On some of them, market sentiment is only maybe mildly negative, whereas on others, market sentiment is absolutely putrid. Like if you ask any number of investors in the junior mining sector about a couple of these names, they're just going to say, no thanks. Right, it deeply negative sentiment, right, and that in that is the opportunity. The reason why the share prices are down so much, the reason why the valuation is so low, is because of that sentiment. The junior mining sector is all about sentiment, and when stocks have negative sentiment, their share prices are lower. When they have positive sentiment and everybody's optimistic, the share prices are higher. It's really that simple. So this list is an opportunity to have a look at some stocks where the sentiment is very negative. A lot of bad news and negativity is already priced in, and therein lies the potential opportunity as we wrap up the final weeks of 2024, turn the page, turn the calendar to a new year, and oftentimes that's a reset that can lead to an increase in investor sentiment. So before we get into it, I just want to point out 2 of the names from last year's list to just give you an idea of sort of maybe how you might use some of these ideas. So one of them was Aston Bay. So my tax loss list was somewhere right at the end of November, basically the same exact time that we're talking right now, the same time of year. And you can see it was about 5 or 6 cents at that time. And you can see within 2 months, it went from 6 cents to 15 cents. So that's a 150% gain. 150% gain in less than 2 months is about as good as it possibly gets, really. Obviously, I didn't guess that was going to happen quite like that so quickly, but don't stare a gift horse in the mouth, right? So if you buy one of these stocks on this idea list and it goes up 150% in the next 2 to 3 months, please take some profits. Please do. Because as you can see, it was up for a while back in the spring, and then it sort of went into the ugly downtrend. And a lot of these stocks have seasonality. So Aston Bay has seasonality. Very often it peaks in August or September, and then it rolls over just like it's doing now. So these are not marriages. The stocks on this list are not marriages. I don't think any junior mining stock is a marriage, quite frankly. So please don't be afraid to take some profits. And then Western Exploration, WEX. So very similar. Here's the time of the tax losses. I think it was 65 or 70 cents at the time that I put it on my list last year. And look at what it did. Up over 100% within, 3 or 4 months? And WEX gave a lot of trading opportunities throughout the year, right? This big rise, then a drop, and then another rise, and now it's another drop, right? It's sort of in this wild oscillation range. So definitely, please, if you catch a double, take half off the table, okay? Or maybe even take the whole thing off. I don't know. It's your account, it's your decisions, right? But I want to be clear that these are not marriages. These are ideas that could be great, could turn into great trades. They very often have, but that doesn't mean you just hold them for many years at a time, right? So just emphasizing that I believe the tax loss selling season usually really peaks right around this time of year, end of November, and it usually ends around mid-month. And there's a lift that happens in the final 2 to 3 weeks of the year, very often, especially in the final week, like after Christmas. So that's a very strong seasonal pattern. It's the strongest seasonal pattern in the junior mining sector, pretty much, okay, of any market sector, quite frankly. So I believe this period, where we're in the middle of it right now, is undoubtedly the best time of year to be deploying capital across the junior mining sector. You can just see this is a 20-year seasonal performance, and this stretch is pretty strong, right? I mean, it's up 2 out of 3 times in the last 20 years, and the returns from end of November to end of February are often 7 to 8% on average, right? That's a tailwind. You're probably not buying a junior mining stock for a 7% gain, but if the composite is up 8%, then the individual stocks might be up 25 to 30%, or at least some of them will be, right? And that's better than a sharp stick in the eye, okay? All the stocks on this year's list are in the red. Some are very much in the red, you'll see. There's just the reason why these stocks have performed poorly. They've underperformed in 2024. The gold price is up, 30%, 32%. Well, they're not all gold stocks. That's number one. But just generally speaking, why have they performed poorly in 2024? Well, varying levels of disappointment, whether it's slow drill programs, really high investor expectations in the case of Hercules Metals and Patriot battery metals. That's definitely true. Expectations at the end of 2023 were sky high for both of those stocks. So they just weren't able to quite live up to the hype that was generated, and not necessarily generated by the company, just generated by shareholders, right? And then just a lot of companies that need to finance and pointing to next year, right? So if I know that Kingfisher is going to drill in June, well, we're still 6-7 months out from that, right? So a lot of people are just saying, well, I don't need to own it now. I'll wait till March or April, then I'll buy it, right? And so that just means there's less bids in the stock. A little bit of selling pressure can create a downward move, in some of these stocks. I have confidence in each one of these management teams, and also the projects. I mean, there are some very good projects on this list. Many of them are early stage. They are all about exploration, and the results the companies generate with the drilling in 2025 is going to be critical. And actually, in the case of Barksdale, the drilling right now is very critical. I talk about risk. I talk about potential upside. I talk about not paying up. Don't pay up. Don't pay up. Like, I'll take an example of Barksdale. Just being brutally honest here. No relationship to the company. Being brutally honest here. And the same could go for every stock on this list. I bought shares at 15 cents in the last couple of weeks. I didn't pay 15 and a half. I paid 15. I might pay 14 and a half, but I'm probably not going to pay 15 and a half. And that's just because I'm being extremely disciplined, because there is a lot of risk here. If this drill program disappoints, it's not going to be pretty, right? You could drop 25, 30% overnight if they put out a news release with disappointing, results for the first hole, the first two holes, right? It's hard to say, right? I mean, it's already so beaten down. It's hard to say how much downside still exists, but that eventually this company is probably going to have to raise money again. And if they don't have good results that are able to create an upward movement in the share price, then it could be painful, right? So that's why we don't pay up. We don't pay up until there's a reason to pay up. If a company like Barksdale puts out a news release that's like, oh, look at that drill core, then okay, then maybe we pay 16, 17, 18 cents. But let's see it. Like, show me, right? These companies have, generally speaking, disappointed. So they are very much show me stories. So show me the goods, and then maybe it's worth more than it is trading at today, right? Again, it was challenging to narrow down, but I went with what really felt compelling to me. I felt the strongest conviction about that really could generate upside surprises next year. So Hercules Metals, you've heard me talk about it a lot. I don't think I need to go into exhaustive detail. It's all really pretty much here in this post, but clearly expectations got very high, very far, very excessive, very fast, and 400 million Canadian market cap at the end of 2023, based upon one drill hole and an investment from Barrick Gold, right? So that was 400 million Canadian for early stages, already pricing in a discovery, right? Because when you're early stage, well, there's going to be several years more of de-risking, of drilling, of feasibility work, more dilution, right? So that's a 400 million early stage first deep drill hole. That's pricing in a lot of good news, right? And so we've had that hangover. The stock, well, it just put in a lower low at 46 cents earlier in November. It has since moved up. I think 46 is pretty low. Okay, I think it got pretty oversold there. But I'm sticking with like 60 cents. I feel comfortable with the value proposition here. But until we see more news, more drill results, I'm not saying don't chase it up to 70, 75 cents. Like, stay disciplined. I think 60 cents is attractive. Lower than 60 cents is attractive. But stay disciplined here until we get more news that could raise the valuation, positive news. But I think the big thing here is scale. So some of the skeptics out there, well, they haven't drilled an economic drill hole yet. Well, they don't even have full grasp of the ore body. So how can you talk about economics yet, right? I think it's very easy for the junior mining naysayers, the guys who try to sound smart by being skeptical, which is cool because being skeptical generally is smart in junior mining. But they're like, oh, 350 meters, 0.5%. That's not an economic intercept at those depths. Okay, but what if they have 20 holes like that across a 1,500-meter strike extent area? Then we've got a billion-ton ore body. And could there be some higher grade zones? We know there's higher grades in the enrichment layer, right? This, enrichment blanket in purple, there's 1% plus copper grades in here. And they've only drilled this, basically 1,200 meter strike extent area. They've been focused in one area. I mean, if there's some criticism to be laid, it's that they didn't step out more, and they stepped out a lot, but I feel like there's more drilling that could have been done, right? And obviously that was the challenges at the beginning of the year really set them back in this year's drill program. But there's so many juicy targets, and Grade Creek is sort of at the top of the list after this news on November 19th. This was a good news release, guys. This was a really juicy news release, and I wrote about it, made a video about it. So I'm not gonna go into this in great detail, but I think this is my number one target heading into 2025. We have these three holes, 24, 19, 20, and 21, pending down here, the southeast early biotite area. That is very interesting, including the breccia pipe. We're not sure. But this is very interesting looking core. What is below it? And then this thing, which is just like, what the hell is going on over here? Remember, they've just been focused in this area. I mean, really, it's easy to talk in hindsight. It's easy to be a Monday morning quarterback, but let's just, call it like it is. They've focused in this area, right? There's big areas of interest over here. We haven't even touched the eastern fault block where there's this huge copper and soil anomaly, and then obviously Grade Creek. Yeah, they stepped over here, but it seems like the vector is actually a little bit more here to the west. And it actually makes sense that if there was a porphyry center here that drove hydrothermal fluids up to surface and down here on this western corridor where we see higher grades in the enrichment blanket here to the west, right? Like holes 2305, 2408, now 2412. So the pieces of the puzzle are starting to come together at Hercules. And I feel, especially, so today's news release about the metallurgy results, great news. It's an important de-risking step. And I'm sure that Barrick Gold is paying attention to this news, as maybe are some other larger mining firms, right? And, we knew they were going to shut down drilling at the end of November. Chris said that a couple of times, so no surprise. They're shutting down Phase 3 drill program, demobilizing personnel and equipment. And, so we have 4 months of preparation for next year. And, if the stakes were big in 2024, well, the stakes are even bigger in 2025. And they have way more data, way better understanding of the system and where to target than they did last April, right? And so a lot of lessons learned, and I feel more confident than ever about Hercules. So I'm just going to leave it there. Not without risk, of course. Not without risk. I mean, who knows? We got assays pending for, I believe, 9 holes, 3 of particular interest in that southeast biotite zone. But 2025 is going to be an exciting year for the Idaho Porphyry Belt because Barrick's going to be much more active. Scout's going to be drilling at least 10,000 meters. And I think Hercules will up the bar, probably go 25,000 meters in 2025 since they have this new powerful RC rig. And I think they can definitely keep a diamond rig and use 2 RCs, including one for pre-collar. So they can use one RC to drill entire holes, stepping out, scout drilling, and then they could pre-collar with one as well. You know, it could be dynamic, how the drill program goes in 2025. In fact, they might even be able to do more than 25,000 meters because the RC is so effective. So anyway, yeah. Barksdale Resources. So this is Southern Arizona. Read what I wrote. Again, for the sake of time, I'm not going to go into exhaustive detail here, but basically, big disappointment in the maiden drill program at Sunnyside. And that came after years of waiting for drill permits from the Forest Service. The good news, they got the drill permit. They have a 7-year drill permit, so good through 2030, I believe. They overcame a legal objection. They won in court. So that's great. That's great. But the first phase of drilling really didn't go well, right? And so the company kind of reorganized itself in 2024, hired a new VP of exploration, hired a new drill contractor, some other subtle changes at management, including technical advisor. And I feel like there's a higher level of focus right now. This company realizes what's at stake here right now, and they are in the midst of drilling. Now, go through the deck yourself, but I'll just say that number one, they basically are all around South 32 at Taylor on all sides. They have property footprint on all sides of South 32's multi-billion-dollar deposit, very, very large deposit. CRD, 150 million plus tons at, I don't know, almost 10% zinc equivalent. I would just ballpark it just based upon these three metals. But, 3.5% zinc, 4% lead, and 2.5 ounces of silver. That's pretty good. 150 million tons is massive. Massive for an ore body like this, right? The previous drilling in the past at Sunnyside tagged into some really nice silver lead zinc intercepts. I mean, 17 meters of 17% zinc. Sorry, this doesn't even have lead in it. This is zinc and lead. Okay, so 17% zinc lead, 1.3% copper, and 337 grams per ton silver. Are you kidding me? Are you kidding me with those grades? And then 38 meters of 15% zinc and lead, 0.2% copper, and 229 grams per ton silver. So when you start to get in a CRD 200 plus grams per ton silver, just the silver, that's extraordinary. And then 10% plus lead zinc grades is also extraordinary, right? So if they can replicate some of these hits, I think it's worth more than 15 cents a share, right? You can go through the deck. You can see some of the challenges that they had in 2023, just not getting to the targets. Just not getting to the target. So the Sunnyside porphyry was the driver of all of this silver, lead, zinc, copper that came out towards surface to the, I guess it's northeast or east. And so they're drilling right near this property boundary, trying to once again prove that the Taylor CRD extends onto their side of the property, right? And so this is a hole that's being drilled right now, I believe. And don't quote me on it, but I think they're about 1,200 meters deep on this. So we should probably get an update on this hole by the end of the year for sure. For sure. Okay. So I'm just going to leave it there. Read what I wrote. I think it's de-risked substantially at a 20 million market cap on the TSX venture. Company has enough money to continue drilling into Q1, but let's be realistic. This is deep drilling. It's expensive. You're probably going to either have to drive in some of these 23-cent warrants, which there's a stack of those. That right there could bring in over 9 million Canadian. Just those, like all those warrants being exercised, right? And 23 cents is 50% above where the stock is currently trading right now. So that's like your, I think a lift to 20 to 23 would be what would happen if the company generated substantial joy in the current drill hole or holes. So like the first two holes of this program could lift it there. But then obviously those warrants, that 23-cent price is very significant because obviously they layered in those warrants there to incentivize the people who participated in the most recent 15-cent financing. So they have a lot of the upside, right? So the share structure is going to grow substantially if those warrants come in, but it's also, an embedded funding option for the company. So if those warrants come in, they don't need to finance, right? So I think that's totally reasonable that they did that, but just realize that it's not going to jump to 30 cents unless, at least not in the near term, it's not going to jump to 30 cents unless they just drill into a jewel box, right? Kingfisher metal. So this is Porphyry Explorer in BC. Some really compelling BC porphyry targets. Some of the most compelling targets I've ever seen. Okay, so let me just state that very clearly here. But it's Golden Triangle, so the drilling is more expensive. It's challenging. It's seasonal, June through September most likely, right? But when you look at the caliber of these targets, and these aren't just like completely greenfield, like the Williams porphyry, deposit has been drilled, and some of the drill intercepts are quite good, including 347 meters of 0.39 grams per ton gold and 0.33% copper. That's a very respectable BC copper gold hole. Soil anomalies are widespread, very large, big alteration zones at surface, and a lot of evidence there is preservation in the potassic core of some of these target areas, okay? And book a call with CEO Dustin Perry. Let him run you through the whole thing if you're really interested in it. I'm sure they're going to finance in 2025. You can be guaranteed of that because they need the money to drill these porphyry targets, these very compelling porphyry targets. So let him delve into it with you. I've gone through it with him. It was compelling enough for me to put Kingfisher on the list. I think the 8 million Canadian valuation is pretty low, but I understand why. They didn't drill in 2024. They did a ZTEM survey. People don't get too excited about ZTEM and AI analysis, but the groundwork has been done, right? So they've raised their odds of success with the work they've done in 2024. So that's why I think this is a compelling drill spec for 2025. Patriot battery metals. So Fallen Angel. So for premium subscribers, I blogged about Patriot over the summer, and I likened it to NextGen's bear market downturn, where it dropped to I think by the COVID low, it dropped down to 75 cents, right? So, NextGen now a $10+ stock, 6 billion market cap, one of the great, success stories of the junior mining industry of the last decade. Well, it had a bear market phase from 2017 to 2020, dropping it all the way from $4+ a share to 75 cents a share, right? So it's very common for these companies to go through dormant periods as they enter the feasibility and permitting stage. and they lose investor interest, right? It was a high flyer, big discovery story back in 2022 and into 2023. But on the flip side of that is the orphan period, right? I mean, this was a stratospheric ascent, completely insane. I forget what the market cap was at the peak, but it was well over $1 billion, probably close to $2 billion. And that's just a very high, I mean, for a junior to move above a $2 billion valuation is 1 in a million. Certainly at least 1 in 10,000, right? A 2 billion valuation, right? That rarely happens. How many juniors have been bought out above a $2 billion valuation in the last decade? I can count them on one hand, right? And how many companies have existed in the last decade? Probably more than 10,000, right? So the odds aren't great. So once you get up to that level, it's really hard to stay up there. And very often, when the market realizes you're doing infill drilling and your deck is all of a sudden about ESG and First Nations and permitting timelines, technical work, and you also change the project name to Shakich Uwanan. Sometimes you lose shareholders, right? But I think this is a tremendous opportunity here. Okay, I really do. I think that the ore body speaks for itself. I'm not going to go into it, but you can go through the deck. You can look at the drill results. You can look at the 3D images. It's pretty exceptional. It's near surface. It's high grade. It's in a place where you can get permitted. Good infrastructure. Very pro mining province of Canada. And there's evidence that it may have bottomed last week. So let's see. Let's see a lot of false bottoms here in 2024 in Patriot battery metals. But I think we're down to a valuation, 350, 400 million Canadian, where this is pretty compelling. And they already received a $100 million plus investment from a major at a much higher valuation, right? So this is a project that has a lot of validation from some very big players in the industry. And I think it's just fallen on the valley of death phase in the feasibility and permitting life cycle of a mining project, okay? But it wouldn't take much to see this turn around to $4.50, maybe even $5 a share at some point in 2025. I think we have to set our sights lower now, just based upon how far this has fallen. I don't think we're going back to 16 anytime soon, but $2.50 to $5 is a double. Better than a sharp stick in the eye. Pacific Ridge exploration. So this is the most beaten down, most hated, unloved one on the list. 2.5 cents a share, 4.4 million Canadian market cap, down 83% in 2024. A lot of things went wrong, including they lost 1 or 2 of their biggest shareholders back in the May-June timeframe. You can see those cells in the chart, those big volume down days. And it's tricky because, big shareholders are valuable in the junior mining sector, right? They're valuable for these companies because to hold 5, 10, 15% of a company's shares and not be able to easily sell it, you're taking a substantial amount of risk, right, as a large shareholder, right? You're also writing bigger checks in the financings. So these shareholders are valuable, but it seems there was a difference of opinion for how the company was going to proceed in 2024. The big shareholders wanted to focus on the Clyoul copper gold porphyry project, which is the flagship of the company, so that's logical. But Clyoul is more remote, right? So the drilling is more expensive, it's more costly. And when you dig into it and you understand sort of where the company left off at Cliole in 2023. They really felt they needed better targeting to vector in on maybe the higher grade feeder structure, right? That fed this main zone, this KMZ, right? And so they did that. They did a ZTEM survey at the end of the summer, and the results were pretty compelling and gave them a very clear vector to the northeast. Okay, so there's definitely, and the last drill hole of 2023 was this KLI 23069 that ended in 45 meters of basically 0.6% copper equivalent grade. So the grade was increasing at depth at the end of the hole, this furthest northeast drill hole from 2023, right? And so you got 700-meter strike extent corridor that's open here to the northeast, and very likely this is the area that the next drill program will immediately target, is this KMZ to clip corridor to the northeast. Already, the drilling at Cliole has outlined a pretty substantial ore body. I mean, we're talking about 760 meters wide, 600 meters north to south, drilled to 650 meters depth. Pretty much every hole hits pretty wide intervals of copper and gold. So they have a very good starting point at Cliole, but now they need to find a higher grade zone, right? Because just the location, the depth of some of these holes, 0.4 to 0.5% copper equivalent is marginal, probably. You need to find some 0.6, 0.7% grades over a pretty big area to really make this work and turn it into a world-class copper gold porphyry. But it's got a good starting point, that's for sure. And at a $4.4 million market cap, the company is not being given credit for anything. They're basically valuing the flagship as well as the other porphyries, Chuchi and RDP, at zero. So it's up to the company to show the value. It's up to the management team to demonstrate a path forward. And right now I feel like here's the big spring selling, and it never has been able to recover from those big shareholders exiting. But it's up to management to prove that there is substantial value here, and that 2.5 cents a share is just simply too low. And finally, Scottie Resources. So Scottie, Golden Triangle, but not typical Golden Triangle. They're located near Stewart, BC. So they're located near one of the bigger towns in the Golden Triangle with great infrastructure, port access, deep water port access. You see Scottie basically flanks the whole town, and they're near Ascot, and they're on both sides of Newmont. All right, so Scottie has a very big land position, great location near Stewart, BC, excellent key infrastructure in place, and a very pro-mining area of Canada, of BC. See, there are a lot of boxes checked here. I think the share structure was a previous point of contention for Scottie that may have held it back. The share count was up near 300 million. Well, they did a rollback, and actually that is effective as of today. So now they're down to 50 million shares. So let's say $1 a share in Canada, 50 million shares, so 50 million Canadian market cap. After the 6-for-1 rollback. A lot of assays pending. In fact, the company just put out more assays from the Scottie gold mine this morning. You can see that news release right here. 11 grams per ton over 7.5 meters and a pretty near surface gold intercept there. And they are advancing towards a maiden resource in Q1 2025, probably late February, early March. You'll see that. Company is setting modest expectations at around 1,000,000 ounces. Well, I wonder if they're setting it a little lower so they can jump over it. We will have to see, but pretty confident just based upon the size, the scale of these zones, the drill density in these areas as opposed to the low drill density in these areas that are in between these gap zones. I think they have a pretty clear path to get this up to 2 million ounces with more drilling. And the key is just more drilling, right? So 2025 stands to be a potentially very aggressive drill program for Scottie, where they might go pretty big this year. Definitely bigger, more meters than they drilled in 2024. Strong financial backing, including this gentleman by the name of Kevin Jennings, who owns 10% of Scottie's outstanding shares. So he has put his money where his mouth is, about $5 million. He's been a consistent buyer on the open market. And look at his resume. Barrick Gold and Xstrata, Falconbridge. Pretty impressive. I feel like 2025 stands to be a transformative year for Scottie Resources. I'll call it Scottie Gold because the resources are gold. So that's it. Those are the 6 names on the list this year. Obviously, you can assume I'm talking my book. Yeah, I own these stocks, or I intend to buy more of these stocks in the future. And you can be sure that not every stock on this list is going to have huge returns in 2025, right? Usually there's 3 or 4 winners, there's 2 or 3 losers. Usually at some point in the year, maybe 4 or 5 of these stocks will have pretty big gains, but that doesn't mean that they will keep generating larger and larger gains or they'll stay up. So again, don't be afraid to take some profits when you have a winner, okay? Thanks for tuning in. As always, if you enjoy this content, if you like my videos, if you appreciate the time that I put into this free content, please hit the like and subscribe button. And don't be afraid to share it on social media. Have a powerful trading week.